Hello, today is July the 9th, 2025, and it's time for some news topics. June was a good month for stocks, with averages going up 4 to 6%. The US economy is remaining stronger than a lot of investors were expecting, with unemployment staying very low and inflation subsiding slightly, despite the tariffs that took effect earlier this year. So things are looking better than expected. However, equity valuations are high, making it hard to find good investment opportunities. Having said that, we are still able to find some good businesses, good prices to buy. So here are my top 3 picks. My first stock pick for the next 12 months is Allison Transmission Holdings, Inc., symbol ALSN on the NYSE. Allison Transmission is the largest manufacturer of fully automated transmissions for commercial vehicles. The company's automatic transmissions allow customers to achieve better fuel and operator efficiency than less expensive manual and automated manual transmissions. The company's transmissions can be found in trucks, buses, heavy-duty pickup trucks, motorhomes, as well as in off-highway equipment and military vehicles. This company has been very nicely profitable over the last 10 years, grew its revenue from $2 billion to $3.2 billion, grew its equity from $1.2 billion to $1.8 billion in the same time, all while paying dividends to its shareholders. It trades at a very reasonable valuation of 11 times forward earnings, and it's buying back its own shares, recognizing the value of its shares to the tune of 4.3% of the shares outstanding per year at current price levels. Military spending is strong, the economy appears to be strong, so the chances of continued high profitability are good. I like it. My second stock pick is the Hartford Insurance Group, symbol HIG on the NYSE. Hartford Insurance provides property and casualty insurance, group benefits, and mutual funds. The company currently conducts business in the following segments: business insurance, personal insurance, property and casualty, other operations, employee benefits, and Hartford funds, as well as a corporate category. The company generates a majority of its revenue from business insurance. This company has been able to grow its revenue from $16 billion per year to $26 billion over the last 10 years, and has grown its earnings per share from $4 to over $10 per share in the same time period. Not every year was profitable, and notably had a bad loss in 2017, but generally speaking, it is a consistently profitable business. The stock trades at a very reasonable 11.3 times forward earnings, and the company is buying back its own shares at the rate of 4.4% per year, with management recognizing the value of the shares. We agree with management, and we think these shares should be bought. My third pick is Alphabet Inc., symbol GOOGL, on the Nasdaq. Alphabet is the parent company of Google. The California-based company derives slightly less than 90% of its revenue from Google services, the vast majority of which is advertising sales. Alongside online ads, Google Services houses sales stemming from Google's subscription services such as YouTube TV, YouTube Music, platforms, sales, and in-app purchases on Play Store, and devices such as Chromebooks, Pixel smartphones, and smart home products such as Chromecast. Google's cloud computing accounts for roughly 10% of Alphabet's revenue, with the firm's investments in up-and-coming technologies such as self-driving cars like Waymo, Health, Verily, and Internet Access, Google Fiber, making up the rest. Alphabet, one of the so-called Magnificent Seven stocks, has been very profitable since its founding. With OpenAI and ChatGPT recently entering the search market, which Google dominates, some investors believe that Google's internet search dominance will come to an end as more and more people are switching to AI tools for internet search. The result has been that Alphabet's valuation is now at 18.4 times forward earnings, which is well below its historical average. This is one of the reasons why we like it. The stock's valuation is now reasonable, so as long as the company delivers decent rather than stellar results, we will still get a good return from the stock. One thing that excites me about investing in the internet giant is its leadership position in quantum computing, which could be the next big thing the markets latch on to. As always, if you have questions about whether these stocks fit in your portfolio, or if you have any other investment-related questions, give us a call. Thank you, and have a great day.